And we are back again with the Trump trade war. Guys, we already know the playbook. We've been here before. Trump's going to do some flexing. He's going to talk big, talk strong. Stocks are going to sell off. Then he's going to announce a big, beautiful trade deal. Stocks are going to rip. So buy the dip, except Apple, sell that stock. Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks fell on Friday to register weekly losses as investors assessed President Trump's latest tariff threats and potential impact for his massive tax bill on the deficit and the economy. And guys, selling was led by the mega cap, specifically the tech sector right here. Look at technology, hardware, Apple, Nvidia, semiconductors as a whole, very, very red across the board, but software as well. Microsoft, Google, Meta, Netflix, Oracle, all in the red. We had some stocks that were in the green. We'll get into it because of its earnings, but they were far and few between. Amazon fell 1%. Retail trade was down in a big way, except for Walmart, which gained 0.5 percentage point. Tesla was down 0.5%, and the only green we saw here in the market today was like these quintessential defensive sectors. Stuff like utilities, look at communications, they were in the green with gold up 2%, and it was really telling you that today was a risk-off move, a position into safe havens and defensive US stock sectors, stuff like real estate, stuff like staples, stuff like utilities. These were all in the green. Every other sector was in the red, and again, selling led by the cyclical sectors, sensitive sectors, high growth sectors, with the S&P 500 falling 0.68%. We saw selling everywhere though, mid caps, small caps, large caps, with large cap core and mid cap growth really underperforming, but it was a red day across the board. There weren't really any winners today, mostly just losers, especially for those holding just the S&P 500. However, globally, it was actually very, very positive. Look, Canada was green, South America was green, most of Asia was green, same here with Australia as well as South Africa. The only red we saw was sort of in the US as well as Europe. Europe was deep in the red, and that's because Donald Trump came out and said trade talks with the European Union are going absolutely nowhere. And so we are going to impose a 50% tariff on the 1st of June if a trade agreement is not agreed upon. So hopefully we get good news with that this weekend. Otherwise, 50% tariffs on all EU imports. Donald Trump also took aim at some US companies. He said, I have long ago informed Tim Cook of Apple that I expect that their iPhones that will be sold in the United States of America will be manufactured and built in the United States, not India or any place else. If that is not the case, a tariff of at least 25% must be paid by Apple to the US. Thank you for your attention to this matter. And he wasn't just taking aim at Apple. He took aim at all smartphone manufacturers, Samsung, as well as others, and said they will also be subject to a 25% tariff unless their product is made in America. It's going to be very interesting to see how Samsung and Apple go about this. Are they going to bring manufacturing back? Are they just going to eat the 25% tariff? I don't know. We'll see how it pans out. Now, Trump also came out with some good news for the US steel industry, and he tweeted, I am proud to announce that after much consideration and negotiation, US Steel will remain in America and keep its headquarters in the great city of Pittsburgh. For many years, the name United States Steel was synonymous with greatness, and now it will be again. This will be a planned partnership between United States Steel and Nippon Steel, which will create at least 70,000 jobs and add $14 billion to the US economy. The bulk of that investment will occur in the next 14 months. This is the largest investment in the history of the Commonwealth of Pennsylvania. My tariff policies will ensure that steel will once again be forever made in America. From Pennsylvania to Arkansas and Minnesota to Indiana, American made is back. I will see you all at US Steel in Pittsburgh on Friday, May 30th for a big rally. Congratulations to all. This is the type of deals I want to see Donald Trump put together. Not this stuff, this. This is awesome. I fully support this. I hope this works out for everybody. US Steel was up 20% today, 4% in the after hours. Congratulations to all. We need more deals like this, Trump. Less trade war, less tariffs, more deals like this. For everything we saw today, guys, Apple was down 2.91%. You know why? We spoke about recently. Other market movers, Webull was down 8%. Now, I spoke about why this is the case on my channel, my second channel, FinFluential Media. We got a Weeble video right here. We also have a couple of other videos on Snowflake, Nebius, CoreWeave as well. We're going to be uploading one on Deckers Outdoors because they were down 20% today and they're down 50% year to date. We're going to talk about why. I know I promised that Deckers video was going to come out yesterday, but I wanted to make one on Weeble instead. But Deckers Outdoors, we'll talk about why the stock was down 20% on the second channel. So go ahead, like, subscribe so you don't miss it. And then for everything we saw today, guys, there were 3,600 decliners, 2,600 advances. We saw net outflows in both the New York Stock Exchange and the NASDAQ 100, and market momentum is not that great. We're still holding the 50-day moving average right here, but we weren't able to recapture the longer-term averages, and that is a bit of a red flag. And we've lost the 5-day, we've lost the 20-day. Market momentum from last week has actually deteriorated this week as stocks have pulled back. So this is often not a good sign. We will need to recapture these shorter term averages for the momentum to continue. Otherwise, it looks like the market may need to find support somewhere. Now, diving into the charts, guys, and looking at the week at a glance, it was a very ugly week for equities. You could see the RSP, the worst performing index, down 2.43%. The Qs are the best performing, but they were still down about 1.2% on the day. The SPY, the Dow Jones, and the IWM were all in between. And the best performer this week was gold, up 4% on the back of some of the trade tensions we got in aggregate. Now, looking year to date, we could see gold is up 26%, and we can see that some of our major indices, stuff like the SPY and the Qs, are flat, slightly down. The IWM is still down 8%, and the difference between the IWM and gold is absolutely insane. That being said, the place to be so far this year has been gold, but if you had bought the lows right here, you would be up about 14 to 15% for stocks in aggregate. That being said, very solid performance for gold. Now, guys, looking at what happened on the day, the S&P 500, the NASDAQ 100 were the worst performers, down 0.6 and just under 1% for the NASDAQ 100. And we saw outperformance here in the broad market. Look at the IWM and the RSP, mid caps and small caps too. So that's really telling us that a lot of the selling was concentrated in some of those bigger names. We're looking at Google, Apple, and Nvidia. And that certainly was the case. Trump was taking aim at Apple today. However, Europe also was down 0.93% in a very big way. China was kind of flat and volatility did tick up. And you can see here that we're almost at a backwardation level with front month VIX at 22.285. Spot VIX at 22.28. So we are in a tiny bit of backwardation, but the curve looking rather flat going into the new month of June sometime next week. Yields actually fell today. The 10-year, 30-year yield fell. The 2-year yield gained ever so slightly, and the dollar took it on the chin, down 0.8%. And as a result, we saw bonds gain ever so slightly. Bitcoin down 2.88%, pulling back from those highs. We'll talk about it. And then we saw commodities gain across the board, gold, silver, crude. They were all up in excess of 1%. Now let's talk about the S&P 500. And guys, everything about what's going to happen next week is going to depend on what happens this weekend. The game plan is very, very simple. We were looking for a pullback from these highs right here all the way to the gamma flip. We got that, but we got that with a reignited fears in the trade war. So this weekend, we have to see, do we get a deal from the EU? Do we get a deal from Apple, from Samsung? If we do get some very positive trade developments, this is definitely a buy, and we're looking to go ahead, retake these highs, aim for all-time highs. However, if we get further escalation in the trade war, and I mean bad escalation, we're going to go ahead and target this gap right here. And that level is the 56.79. And we could go as low as the 5600. So don't try and predict what's going to happen this weekend. It's best to probably just react to all of the market movements that happen on Monday. So don't predict, react to everything. I did actually go ahead and free up some capital, particularly in my options account this weekend. Took a bit of positions off. And then when Monday happens, we'll see what happens. Do we get a bullish Monday, bearish Monday? And then we'll take positions retroactively as it goes. That being said, on a technical basis, we should find support right here and then go from there. However, even if we do pull back, we're still looking technically bullish if we find support from here and go. But if we break below the 5600 area, that's where things get really, really ugly. So it's either right here for bulls or at the 5600 below. Things are going to get very, very ugly, particularly as it pertains to this high right there, which would be a lower high, relatively speaking. It's very much the same trade. It's exactly the same trade for the Nasdaq 100. We're looking for support right here at the gamma flip and then make a move to the upside. If we get escalation in the trade war, then we probably go ahead and fill out this gap right here, that gap being the 20,185 area. Same trade for the S&P 500, the Nasdaq 100, and the RTY, which had a massive wick, as you can see right here. So buyers did step in a very big way right here to take us higher. However, it still underperformed the market in aggregate this week. This price action not looking that great, if you ask me. As long as we hold above the gamma flip zone here for the RTY, I'm constructively bullish because I do think the RTY is cheap, relatively speaking. Now, looking at gold, let's quickly look at gold. Guys, very, very solid momentum. I said yesterday that we were looking like a higher low with this. That thesis was broken, but still, the bulls have a lot of work to go ahead and put in. They need to recapture the 34.38 level for this to not be a higher low and for the trend to continue. Bulls have their work cut out for them. We'll see if that happens, but they did buy this dip right here. And now they just got to aim for that, and go higher from there. Personally, I do like Bitcoin. You guys know this. I said at the start of the week that we are looking for a move higher into this week, but as the week approaches towards the end, we were looking for a bit of a pullback, and that's exactly what we got. Bitcoin was down 2.84% today, and so do expect that pullback to occur to as late as potentially Wednesday. I would say, yeah, somewhere, around the 25th, the 26th, and then we'll continue the move higher. That being said, in the very long term, going back to maybe even mid-August, Bitcoin should continue this momentum we've seen. And I would say that, if you're looking to get in, probably buy Bitcoin on Monday, maybe after a little bit of a pullback, or if we do just get a ramp up, I would say it's probably prudent to enter on Monday. You could also sell some IBIT puts at the 57.58 level. I think IBIT is probably trading very close to the $60 region. Let's go ahead and have a look. Yeah, IBIT trading at the $61 area right here. So I would go ahead, sell some puts at the 59.58 level for IBIT, sort of around here if you're looking to get into some options. Otherwise, probably just get long because this Bitcoin, is going to go significantly higher. IBIT's probably going to go to about $80, somewhere around there when this is all said and done. Let's quickly look at some other market proxies. The 10-year yield at the 4.5% level. It does look like we are sort of finding a bit of resistance right here, but this trend we're seeing looks very, very ugly. We are putting in lower highs at the top here, but also higher lows. So it does look like we're probably forming a trading range. The dollar at the 99 level. Guys, I still think that we're probably at the low for the dollar, at least in the interim. I'm still quite bullish that we are going to go to the 104 area, somewhere around there. But again, not without some volatility and maybe not without before testing some of these lows. Let's have a look at where we are with the TLT. Wow, it looks like we actually broke down and we're moving lower from there. I mean, look, ultimately, it does look like the next low level here for TLT is probably 82, around that area. That was the same level we got to in October 2023. Great buying opportunity here for TLT. I mean, if you take a measured move, right, we ripped up 20% from there to those highs. It was 23%. In that time, you probably would have collected 4.5% in a coupon as well. So TLT, I think you still want to buy, but be prudent with bonds and have some shorter dated maturities as well, not just the long-term maturities, in my personal opinion. Guys, in terms of individual stocks that I do like and that I think will do very, very well, really do like at the moment is just Meta. I own Meta in my own portfolio. Look, it's still well off its highs, as you can see right here. And I think it's actually kind of cheap. It's trading at about 19 times forward earnings. That is not expensive for a company with a moat as wide as Meta, one of the widest moats in the world. And look, still growing in the mid-teens double-digit percentage. So if you are looking for a good play, I think Meta is a great play. If you are looking for a mega cap that's cheaper, I think Google still trades at about 15 times earnings. Forward earnings, that is. It is expensive on a price to free cash flow basis, but that's because of all of the capital expenditure. Google is still a great play right now, and its investor day at the start of this week proved to the world that it is still a leader in the AI space. So those are two mega cap names. I think based on the trade tensions, you probably still want to position yourself in these mega caps. They are still like safe haven bets to a degree with their balance sheets and their effective business model. So those are two names I would look at if you are looking to get long in this market and get some exposure to tech as a whole. Now, guys, let's talk about sentiment, and we continue to remain in this greed zone right here after the stellar rally we've had off the lows. However, we actually have come a little bit off from where we were at the highs. You know, we were at the 71, 72 mark, almost in extreme greed at the start of this week. We have pulled back, and I do think that we are probably going to pull back a little bit further, especially as further trade tensions have come to front of mind. That being said, this fear and greed index is mostly based on the technicals, and the technicals are telling us that this is a bullish setup. However, Wall Street doesn't believe so. You can see right here that this is a very hated rally. And whenever the rallies become extremely hated, like they did in 2022, like they were in 2019, 2020 during COVID, stocks tend to rip up, especially once they retake those all-time highs. We are about 3% from all-time highs. And if the S&P 500 recaptures this, history suggests we do go higher, especially in the interim. And look, I get why Wall Street is bearish. The House just passed a new tax and spending bill. They're going to send it to the Senate. That's going to widen the deficit. Moody's just downgraded the U.S. credit rating. We had a really bad 20-year Treasury auction that sent yields spiking. However, guys, this is a wall of worry that the markets tend to decline. And at the end of the day, you have to bring it back to the fundamentals. And right now, the current fundamentals for earnings, the backdrop is very, very solid. We're looking at 14% in earnings growth. Coming into Q1 earnings season, we were looking for 7% in earnings growth. We have Nvidia reporting earnings next week. And as long as this momentum keeps up, right, I think markets will probably go to all-time highs. Now, Q2 earnings is going to be very, very key to see where we position ourselves. I think the market is expecting a weak Q2, so ultimately we may look through the Q2 window and aim for Q3, Q4. But the fundamentals, in other words, earnings, continue to remain strong. We have Nvidia reporting next week, a big earnings week next week, with Nvidia and Salesforce reporting on Wednesday after the close. So these two are the biggest names for the week. But we also have Elf Beauty, HP, Synopsys, SentinelOne, some of the cybersecurity names, some semiconductor names as well. We also have Costco and Dell after the close here on Thursday. Best Buy for the open, Foot Locker as well, RBC. And then we also have A&F, Macy's reporting on Wednesday before the open. So a very, very crazy week of earnings next week. And not to forget, we do have some China names here, AutoZone. So very, very big week of earnings. Data as well. We get the FOMC minutes. That's really going to kick things off right after we get durable goods on Tuesday. And on Thursday, we get the GDP growth rate. So this is the first quarter, the second revision for the first quarter. Now we're actually looking for a negative 0.3% print right there. So if we actually come in better, let's say we get 0.2%, that's going to be very, very solid. Then we get PCE, as well as personal income outlay. So we get some of this personal income, personal spending data, and that's going to tell us how the consumer is faring in April. So we're looking for 0.4 and negative 0.1% in spending. Very, very fair, especially as tariffs come to front of mind. And then we also get the ISM manufacturing PMIs the week after. But a very, very high impact week of data. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.